All right, let's talk about a real clash of the titans. We're talking about two of the biggest companies on the entire planet, and believe me, they are on a collision course. So today we're going to break down exactly what that means for, well, for how you shop and maybe even how you invest.
So, in one corner, you've got Amazon. We're calling them the challenger. This is the tech giant, the digital behemoth. And in the other corner, Walmart, the defender, the undisputed retail empire with a store in basically every town. This isn't just a business rivalry, folks. This is the ultimate showdown, growth versus value. And it is all about to come to a head.
Okay, let's dive into Section 1, the 2025 showdown. We're talking about a clash of strategies that's going to shape the future of, well, everything you buy. Okay, so for as long as most of us can remember, Walmart has been the king, the undisputed champion of revenue. Nobody even came close. But look at this chart. This is the whole reason we're having this conversation. See that point right there? That historic crossing in 2025? That is the exact moment when projections show Amazon, the challenger, is finally set to overtake the king. This isn't some far-off future. This is right around the corner. It's a massive deal. All right, Section 2, the battle of the business models. So how did we get to that crazy inflection point? To really get it, you've got to look at how these two companies are fundamentally wired, their DNA. It started out as a simple books versus bricks thing, but oh man, has it evolved. Now it's a war to become the everything platform. So here's the breakdown, and this is super important. You might think of Amazon as a retailer, but its real profit engine, the thing that makes the money, it's Amazon Web Services, their cloud business. That's the cash cow that funds everything else. Now, Walmart is totally different. It's what you'd call a retail pure play. Their whole game is about leveraging their physical stores, their proximity to you. But here's the kicker. Look at the bottom. They're both sprinting towards the same finish line, that everything platform. Okay, time for Section 3, a tale of two financials. Let's get down to the brass tacks, the numbers. This is where you can really see how different their game plans are. First step, profitability. And whoa, just look at these margins. It's not even close. Amazon is pulling in a nearly 49% gross margin, while Walmart is sitting under 25%. So why the huge gap? It's pretty simple, actually. Think about it. Selling bits, cloud computing, digital ads, is just way, way more profitable than selling atoms, like a carton of milk or a t-shirt. This creates this huge advantage for Amazon. Now let's talk cash flow. This is one of my favorite charts because it tells such a clear story. It's like two completely different engines. On one hand, you have Amazon, the roller coaster. I mean, look at those dips. They'll go deep into the red, spending billions on new data centers and warehouses, and then bam, they shoot right back up. Then you've got Walmart, the train, just chugging along, steady, predictable, spitting out cash like clockwork, year after year. Completely different philosophies on how to handle money. And that cash flow story leads us right here to their balance sheets. Amazon is basically a cash fortress. We're talking over $100 billion just sitting there. That's their war chest, right? Ready to snap up a company or pour into some crazy new bet. Walmart, on the other hand, is all about lean efficiency, only $9 billion in cash. Why? Because their model is all about speed. Get the product in, sell it, get the cash, and repeat. They don't let a single dollar get lazy. Okay, Section 4, betting on the future. So we've looked at where they are now, but the real question, the multi-trillion-dollar question, is where are they placing their chips to win tomorrow? Let's follow the money. Get ready for this, because this number is just staggering. $88.5 billion. That's what Amazon spent on R&D. That's not a typo. They are, for all intents and purposes, the world's biggest research lab. They are sacrificing profits today, pouring that cash into AI, into robotics, into everything, as a massive bet on dominating tomorrow. And Walmart? Their R&D spend is so comparatively small, they don't even break it out in their financial reports. Think about that. And this slide really sums up their two very different bets on the future. On the left, you've got Amazon's big AI play. It's a classic high-risk, high-reward move, betting that artificial intelligence will reinvent everything. On the right, you have Walmart building the moat. This is a defensive play. They're leaning into what they do best, groceries and their physical footprint. I mean, 90% of Americans live within 10 miles of a Walmart. They are monetizing convenience and proximity. It's a brilliant but very different strategy. And this strategic split carries right over into how they treat you, the shareholder. With Walmart, it's payday. You own the stock, they give you a check, a dividend, they buy back shares. It's a direct reward for your investment.
Amazon's philosophy? It's basically trust me. They give you zero dividends. Their pitch is, hey, give us that money, we're going to reinvest it into the company and create way more long-term value than you could on your own. It's a promise of future growth. Which brings us to our final section, the investor's choice. Okay, so after everything we've seen, it all boils down to one question. Which story makes more sense to you? Are you betting on explosive, world-changing growth? Or are you looking for rock-solid stability? And this chart, it's the perfect visual for this. It is, literally, the story of the tortoise and the hare playing out in the stock market. Look at Walmart's blue line. That's the tortoise. Slow, steady, consistent climbing. Defensive strength. Now look at Amazon's orange line. That's the hare. It's pure, high-octane volatility. Massive highs, scary lows. As an investor, those are two wildly different experiences. So I'm going to leave this on screen for a second, because this is the core question, isn't it? Which stock is right for you? We've laid out the numbers, the strategies, the whole 9 yards. There is absolutely no single right answer here. It all depends on what you're looking for. But wait, before you decide, we have to talk about risk, because nothing is a sure thing, right? For Amazon, the big boogeymen are regulators, who are always looking at their market power, and the cloud wars. I mean, Microsoft and Google are coming for them. For Walmart, the risks are a bit more down to earth. How's the average shopper doing? Can they make their online business truly profitable without a money-printing machine like AWS to back it up? Okay, so let's bring it all home. Here's the final verdict, broken down for 2 kinds of people. If you're a growth investor, you're probably looking at Amazon. You're betting on AI, you're betting on the cloud, and you're willing to ride that roller coaster for the shot at a huge payoff. But if you're a defensive investor, you're likely leaning towards Walmart. You want that sleep-at-night stability. You want a company that does well even when the economy is shaky. And you want that steady dividend check. And really, that's what it all comes down to. This isn't just about picking the better company. There is no better company. It's about looking in the mirror. The choice you make says more about your own investment style, your comfort with risk, and maybe most importantly, how long you're willing to wait.